In this video, I'm going to explain how you can profit going long at spot in a market that looks like this without leverage. Of course, with leverage you can make much more money, but you can also lose much more money. It's important to master spot trading. When you do so, you open up a world of financial possibilities. I'm going to show you specifically how I've been trading Bitcoin throughout this very negative price momentum, and also what we can expect from Bitcoin going forward. But first, let's look across the markets to get you synchronized. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome, and welcome back CTKS family. Here you'll learn how to become fearless in financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe to the channel and smash that like button. All indicators that I use in the daily videos come from the service at ctksmethod.org. Let's run the numbers. When trading and investing, it doesn't matter what market you're in, but here we're focused on crypto. Specifically, I'm focusing in on Bitcoin. When you see prices just falling through the floor, do you buy or do you sell? When you see a lot of negative momentum, do you buy or do you sell? When you see a lot of positive momentum, what's your outlook on things? Are you leaning in or are you leaning out, or are you just waiting to see what happens? I'm a really firm believer in staying inside the market no matter what the price action is. What I've just done is to pop on my trade history. You'll see all these little green arrows, they're buys. The little red arrows, they are sells. So you can see what I consistently do is buy on red and have a targeted rate of return, somewhere from 2 to 10 or even 15%. One thing that we know, small percentages done really regularly can add up to huge numbers. What you can see, I've been buying on red, getting on the right side of the percentage, and often when it dips really substantially, you're going to get a bounce where you can sell into. Sometimes these really big trade-off events, when the price just tanks, the rebound is sufficient to sell your orders. And you can see here we've had a barrage of orders, and you notice that I've been selling and selling and selling as the price came up. And what have I done? When the price came down, I was buying. Also, I tend to lean in at certain times as well. And you can see there's a barrage of sells here and a barrage of sells there. It is very possible to make an enormous amount of money from the crypto space, but you have to have a very specific attitude. And of course, you must know your structural support and structural resistance levels. What you can see here is actual proof of what is happening inside Bitcoin's price history. I'm leaning in on the red and leaning out on the green. I'm borsogging, buying on red, selling on green. A lot of people have been saying, Ken, how do you get into the market when the market has just done a parabolic move up and you're wanting to buy on red and get onto the right side of the percentage? You do it just like I've done right there. I might zoom into that area. The biggest problem that people have when price goes really green, they tend to be buying, putting these little green arrows in, not little red arrows, little green arrows. So they're actually getting onto the wrong side of the percentage. It does take you a while to think from a BORSOG perspective, buy on red, sell on green. But you can see here, I was not adding to the position as it was going up. I was waiting for a pullback, and these levels I leaned in quite heavily. And what do we notice? Because we know where the structural levels are, we can do things like this and turn over those levels and do it quite quickly. This brings us to a really important point. How on earth do you know where to buy and where to sell? As a community, we can mark up charts with the CTKS method, which shows us structural support and resistance levels. Just getting back to that initial thing that I was talking about in the intro of the video. You've seen the actual real trades. You've seen that I've come in on red and sold on green. If we actually have a look at this specific area from down here to up here, we're looking at about a 5% range, and that's not a bad range. If you think about that, you can do a lot in 5%. And what we've seen, even though the price came down, the price also recovered. And what we do is to make sure that we're doing our daily cheat sheet. That is, we're looking across the Tier 1, Tier 2, and Tier 3 charts and seeing intercorrelations and interconnections. As you saw in my trading history, I was layering down when the price was coming down. A lot of people ask me, Ken, how do you deal with a trade that goes against you? If you're doing it correctly, the trade is always going against you because you're seeking to create momentum inside that down wave and then get rid of it in the up wave. When I was studying my finance and law degree, one thing that they taught me in finance, never make a loss. Oh my goodness, what a horrible, horrible thing to teach. And you've probably heard it 1,000 times. This is exactly why people sell when it goes red. They are not buying. And when it goes green, they're buying. They're not selling. After nearly 4 decades inside financial markets, I can tell you, you must do it the other way around. You need to get used to layering into positions. The institutions actually do that. You might have heard about the Bitcoin ETFs and the enormous amount of money that was flowing in and buying Bitcoin, billions and billions of dollars worth, as the price was going down, not going up, going down. If you manage to buy down around the bottom here, from the bottom up to the top was an 11% increase. We understand percentages. We understand that 2% turned over on a daily basis is a huge, huge amount of money. Let's have a think. Where is Bitcoin going to next? And why did it stop here? Was there some reason it stopped there? Let's zoom into that price action. I have some really cool things to share with you today, but I wanted to highlight TF Theta's comment. Taking profits is important and not thinking with a retail mindset that the market will keep on going up. BORSOG trading, buy on red, sell on green, is understanding that the market moves in waves. Knowing your levels and your three-dimensional thinking is really important. And what TF Theta says here is so vitally important. When you can mark up structural levels, or you get the indicator that has the structural levels, you'll look at a chart and you will know what's going on. Everybody else will be guessing, but you will know. Very big thank you to TF Theta. Let's just focus in on this specific area, and I want to show you some really neat things, and we'll come back to all of this very shortly. When looking at price action without an understanding of structural support and structural resistance levels, everything looks very chaotic because the concept is there, the treasure map is there, but you just don't see it unless you can draw out structure. And where is the X-ray vision on the market? It's literally right here. We can see that Bitcoin had a tremendous amount of resistance around this $40,095. A positive fresh air gap which can get filled really, really quickly. These fresh air gaps, positive fresh air gaps, explain how price can move up explosively, because when you get over resistance, you can do very well. And you notice that all of those little red arrows, those sell arrows, were in this area for me. And then there were a couple more over there, up there. What I knew was that we were getting above an area that had been quite strong in terms of resistance. I expected a bit of a push up through these levels, but this is a lot of resistance. I also expected it to come back and to retest. The major level that I was focusing on was this 42,873 level, because that is a structural resistance level. I expected the price to come back, pull back. That's why I was buying. and then seek to push up to this particular structural resistance level. If it can't get above this, it's going below and it's coming back to structure. And let's have a look at what the structure is right now. It's literally sitting on a structural level at 41,786. And you can see it stopped. This is why you must know where the structure is. You cannot be consistently profitable if you're guessing. I saw a call out on X on Twitter last night that said the next level of strong resistance was 43,450. Actually, this is not statistically correct. Let's pop on the indicator and see where the actual levels of structural resistance are. You can see they're nowhere near 43,450. In fact, they're up here at around 44,000. So the next level of very strong structural resistance is at the 44,000. One thing that a lot of people struggle with, and this is really common, they think there's only one level of support and one level of resistance. This is not the correct case. There are multiple levels of structural resistance above price and multiple levels of structural support below price. The one thing you'll find is the structural levels of resistance and the structural levels of support are not in the same pattern for every price chart. All price charts are different. They have different personalities. This is really vital to understand. One thing that you really need to keep an eye on is total crypto market cap, which has been trading in excess of 3,900 days. I reached out recently and said, how were the community going with this positive price action? Because don't forget, it was really negative before, and JT has been doing really well. Congratulations, my friend. JT says, I've been taking profits on my trades and took more percentage than my bank would pay me for the next 10 years. Wow, you're a legend, JT. He goes on to say, this is thanks to the masterclass, the CTKS method service and the daily videos. I buy at the SLs, which are Stanfield levels, and watch the SCs, which are accumulations of SLs. It's not about where I sell, it's about the inner peace it creates in combination with the happiness and gratitude that results from every successful trade. It's so much fun to BORSOG and to be patient for the markets to come back to my buy targets. Because the markets always move in waves. Fantastic, my friend. That specific rule, price moves in waves, is a doozy because it really explains what's going on. When we look at total crypto market cap, we can see that it's very similar to what happened with Bitcoin, but the structure inside total is very, very different. And that's why you can't assume that the structure inside one chart is the structure for another. It's just simply not the case. We were talking a lot just before the 26th of January about the concept of this positive fresh air gap. If the bulls maintained control and pushed up there, it was going to be fantastic for the crypto market. And it really was. But what happened there? There was a structural resistance level. Look at this. It just exploded up to structural resistance. And then what did it do? It just hung around there saying, I need some more buyers to come in. I've done such a big push up. I got indigestion. I need to sit this out and digest this move. And then what did we see? Another structural resistance that it couldn't get across. This is why you need to cross compare the tier 1, tier 2 and tier 3 charts. And where has it come back to? Another structural support level. Knowing this and getting X-ray vision inside the markets is an absolute game changer. As a former lecturer in statistics first and second year, I can tell you statistically significant support and resistance levels are not what people think they are. Typically what happens is people draw out areas just based on very recent indicative price. Recent indicative price spells out RIP. It RIPs your money because you must take into account all of price history, not just a snippet, not a sample. You need to do a census. That's what the CTKS method does, and you can learn it yourself to draw up any price chart. It's a really good skill to have. But the concept, when you are going into social media and someone says boldly, oh, the next resistance is 43,450, Well, where's the support, and what is the strength of that support, and where is the resistance, and what is the strength of that resistance? You can see this resistance, when it's thicker, it's stronger. These ones are thinner, and there's no resistance at this level whatsoever. As a statistician, I run numbers on the markets each and every day, and with a finance background, I know what I'm doing. So with that, let's just delete that level. If you understand where the levels are and you understand the cross correlations between the tier 1, tier 2 and tier 3 charts, you're going to do exceptionally well. Now, what has Bitcoin been doing? It definitely rejected this structural resistance level at that 42,874 level and came down to structural support. But you can see there's more structural support below it. This is exactly what we want to see. What you will see all the time is the market is liquidating shorts, then liquidating longs, liquidating shorts, liquidating longs. And when liquidation events occur, you can get these long tail spikes downwards until they find structural support and then they rebound. As JT was saying, you need to have that mindset of knowing where the structural levels are, and then you can make really informed decisions as to where you want to place your buys and your sells. We can see that Bitcoin is currently 41,830, and it has a lot of structural support below its current price. This means that it's going to be hard for the sellers to push down through here because this is really strong. But if you didn't have the indicator or you didn't mark up your chart, you would look at this and say, oh, it's about to fall off a cliff. Oh no, I'll sell. Selling at support is not a good idea. Each day, I seek to give you an edge inside the markets, inside all of them, because if you know how to do structure on one chart, you can do it to all charts. It's an incredible skill to have, and I want to just reach out and thank a community member who shared this with me. This is a really interesting price model. What it's seeking to do is to understand how the Bitcoin price could go up over time, up until 2034. That's not bad. And it actually puts in the halving events. And you can see before the halving, price is just going inside this normalized band. And that was COVID, so that was a heck of a sell-off. But the idea, post-halving, you have this squeeze as people get into the market. We're expecting a squeeze. This specific model is expecting a squeeze in around 2026. Oh, that's going to be a ripper. Basically, years and years of price appreciation for us. And if you know how to trade, you're going to take the amateur people who say, oh, I want 100x. And you're going to say, check out how many X's I have by just turning small percentages into very large percentages because you're doing it all the time. But what do I mean by that? If you're new to the community, a very warm welcome, and I'll show you. Just a small example, if you took $100 and you made a 2% absolute return on investment, you get $2 back. That sounds like, oh, Ken, why would you even bother? I want 100x, I want 1000x. Well, what about 137,640% return if you could just do that each day? Just be aware, really small percentages, they can really, really add up. What if it wasn't 102? What if it was 3% return? Whoa, 4.8 million%. If you start to crack the code and understand how small absolute return on investments gathered just consistently, like what you can see me do, if you can do that, you're going to do incredibly well, but it does take time. And like JT said, it's absolutely possible to do. Getting back to this particular thing, you can see that this model shows a lot of consolidation with a bit of an upward bias, but there's a lot of variability in that model, and then it starts to take off. It doesn't mean it's going to follow that, because in the past, that model has been either under-predicting it or over-predicting it, and don't forget, these models basically fit statistically the best fit for that particular curve. That is, they're fitted. But it is interesting because it's basically saying that Bitcoin will go above $100,000. That's not bad, and literally up to $1 million in 2034. And I would suggest that this is correct. Over the long term, Bitcoin is going to do incredibly well. There's been other charts floating around Twitter/X about the recurring 65-month cycle in global liquidity. And what are we seeing here? A bit of a kick up in global liquidity. As that happens, it just forces money into risk-on assets and could cause a serious bull market if that follows through. But the one thing, we don't care if it follows through. It can follow through or not follow through. It makes no difference to us because we're borsogging all the way to fantastic, phenomenal returns by just pushing the money in and out of the market all the time. There was another chart floating around crypto Twitter, which was a little bit sort of on the negative side. That was global M2 money supply, but I did my own analysis and I can't concur with this particular analysis. Maybe his definition of global is different from mine. Global for me is all the countries. It's possible that they may have been more selective. Also, when we do BORSOG, we're placing levels underneath the current price. And if we do this, we have dry powder inside the market. So that's something to bear in mind. Today, Zero Hedge put out an article. US officials believe that North Korea will soon launch a limited attack on South Korea. Unfortunately, this is bound to happen at some stage. That's why we need to keep our eye on gold. Gold is geopolitically sensitive. If gold starts to rally, it could be this murmur, this tremor coming through the markets and saying, hey, pay attention. Our philosophy is very straightforward. We have three-dimensional risk management. We say, what will we do if the market comes down? What will we do if the market comes up? What will we do if the market flatlines? We have three simultaneous strategies at all times. And the truth is, if you BORSOG, you're going to make really good returns. And if you're investing, please take note of where all the structural levels are. You'll need them. When it comes to volatility inside the market, if that threat of war gets out, it could put negative momentum inside all risk-on asset classes, including the stock market. It's unfortunate. The world is always at war. Somebody's always blowing up someone. In the history of the world, I think there's been about 4 days of consecutive peace. People just can't get along. If you're an investor or a trader, it doesn't matter. It's all about how you react to the market. If you're an investor and you were buying when Bitcoin's price was going down, in expectation that years from now it will hit $1 million, and I have no doubt that it will, well, then you were doing really well. And if you were buying on the way up, well, that's getting on the wrong side of the percentage. You technically paid between 5 to 10% more than what you should have. A lot of people say, but that's okay, Ken. I don't want others to suffer. Trading and investing is not a zero-sum game. People are inside the market for a wide variety of reasons. You have millions and millions of people on both sides buying and selling for millions of individual reasons. Your reason is not everybody else's. Our key is to always look at structure, and we know Bitcoin is sitting smack bang on a structural level. Please let me know in the comments, where do you think Bitcoin will be headed to next, and something else important that I need to cover off. It's absolutely vital that you keep current with the Tier 1, Tier 2, and Tier 3 charts. The Tier 1 will give you the direction of the main market. If we see the gold is starting to spike up, even though yields could be spiking up at the same time, it means that people are taking the threat of war very seriously. When war breaks out, it's likely that the DXY will get positive momentum, so keep your eye on the DXY as well. But the key is to look through the indicators of the Tier 1, the Tier 2, and the Tier 3, and just see how all the structural levels are intercorrelated and interconnecting. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.